It's a new week and apparently risk it's on. Hey everyone, this is JR from the Market Surveillance Alliance, where basically what we do is follow the footprints. That's right, we follow the footprints every little step of those high rollers in Wall Street. We want to make sure we are paying attention. Okay, listen to me, we're paying attention to every move they make. It's not about having a bias in the market, it's about understanding where is the big money rotating, where's the big money playing, where they're allocating their bets, and that's when you want to start. Don't have a bias. Don't think you know, because we probably don't. We are going to find that one. Someone knows, and we will figure it out through our proprietary technology, and that's what we do, okay? That's how we go for the big wins. From weekly calls, puts, it doesn't matter where they're going. We just follow them. Don't fight them. Join them and make money, okay? So today I want to start with this basic concept, risk on. If you're a trader, if you're a professional in the industry, you have the idea what's happening. Now, if you're new, like a lot of families in the US, a lot of families now in South Korea, Japan, Latin America, even Europe, right? They have all these fights with the Russians, especially Germans, fighting for natural gas. That's okay, that will be a topic for another video. But what I want to share today is the concept of risk on. So basically it means that at least in the short term, or at least at the moment, investors are feeling the need to move money, to take risk. Money in cash doesn't yield anything. It yields a lot of headaches, right? Remember, lots of cash, it's a passive. Yeah, it's not an asset, it's a passive. So you have to watch out. It's a liability. So you need to move that money. And that's what professionals are doing, at least for now. So how do you figure what the market is doing right now? Hey, let's take a look at Bitcoin. Bitcoin is a risky and it's a risk asset. That means that a lot of people thought it was an inflation hedge. Sorry about that. But yeah, a lot of people thought it's an inflation hedge. There's this romantic idea that will take over the dollar. Hey, I don't care. I don't like romantic ideas. But I got to tell you, there's definitely a move here. And as you can see today, we're looking at the daily chart. Pay attention because we're about to break. This is like a setup in a way, what we call higher lows. Yeah, it's not lower lows, actually higher lows. This low is higher than the previous. And this low never went under the previous low all the way from June 30, okay? So that opens door for a continuation and a break above this level, 22,500. Again, repeat, 22,500, $22,000 and a half for Bitcoin will open the door for a push. Just real quick, let me take this out. In the short term, that will mean a lot of opportunities for the US stock market. So you do want to learn what's the concept risk on and how to apply it. So we have about $5,000. So in the short term, in about 2 weeks, do not be surprised if you see Bitcoin trading back at $28,000, potentially 30,000. And the reason why I started my video today, Monday, today is July 18, is because I want to make sure you understand this concept, because once we have risk on, that's when you want to go in. That's when you want to look for the next opportunity. That's when you want to bet, because the market is, it's inclined to be with the side of buying. Okay, you want to buy, you want to look into call options. Now, a lot of people say, oh, call options are getting expensive, but that's just the mechanisms. And I will talk about that on future videos this week, so you learn more about the market and how to position yourself. If you're new to trading, this channel will be perfect for you. If you're looking to add a little bit more ammo, okay? Just remember, English is my second language. If you're looking to add more ammunition, more tools to your, like Batman belt, this is where you want to be, the Market Surveillance Alliance. So I'm betting we're going to have more, and it's not just because me, it's because I have the tools, not understanding also options, but also understanding what is happening with the Hawkeye trader. We are switching from dark red to dark green. That means the beginning of something that can potentially turn into an important bullish trend, at least in the short term for Bitcoin. And that will go, needless to say, this will translate into the US stock market. So just to finish my video for the day, you are looking right now to buy the dips in the short term. Why? Because as I said last week, we're looking for this structure, kind of triangle. A lot of people betting on the downside. It sucked. It drained, a lot of plays into Friday. But if you buy the dip here, we're looking to make up to 5 times your money on SPY call options, targeting the 384 strike price. Now, saying as my colleague Steve Plays from the Precision Volume Alerts and Insider Expose, he's the editor. I do think that there's a little bit of mixed feelings and mixed situations developing in the horizon. There's a lot of, we can talk about all the gloom, boom, and doom. But so far, what I will be looking at break of this trend line and all the way potentially fighting the 4,200. I understand this is a bold view in the market, but please keep an eye because, like it or not, the SP 500 is set to revisit the $4,200 level. Now, you may think it's a joke, but it's not. It's because there's so many people, so much money betting on the downside. I understand why there's a lot of these discussions, but if you think about when people say, oh, the U.S. economy, the U.S. consumers, just so you know, the U.S. consumers, they have close to 2.3 trillion in savings, excess of savings. We can always discuss this, is this right, is this correct or incorrect? But yeah, now that money is in the upper band of the social classes. But at the end of the day, yes, U.S. consumers are fighting back and they have how to fight. Not everyone, it's not easy for everyone, but definitely will require more work of you, probably put a couple extra hours, but it's something that is doable. Not so much for Germans, not so much for European Union, where the euro now is at parity. A little bit of a disgrace, but hey, I guess it is what it is, right? When they were at 160, they felt powerful. Now they're feeling, once again, the power of the buck. So pay attention, buy the dips. I'm looking for this strategy, looking all the way to potentially, I know, sounds crazy, but everyone is betting on the downside. And the market is reacting to positive news from Citigroup and Apple, the big Apple, that Apple, sustaining the US markets and carried like Atlas in the Greek mythology. So think about that. The market should have broke down last week. It didn't. I think it should have broke down. But you get the point. My idea is pay attention because although lots of people are bearish, there's potentially a massive short squeeze to the upside. Short squeeze are always to the upside in the S&P 500. Risk assets are on, and you should be paying attention because this is now on the table. Guys, thank you so much for watching. If you like the ideas, if you have something else to say, there's a comment section. But at the same time, I want to thank you for watching. Thumbs up, blast, crush the like button because I will come back with more ideas, things that you think you may know. But hey, we're looking for that, people. And that's how we track the professional money in Wall Street. We're tracking those high rollers, understanding how they're betting, why they're doing that. Because at the end of the day, never forget, someone always knows. Ciao.